Hi, welcome to Ideaspring's Founder in Focus podcast series. We do this to talk to our founders, celebrate their journey, and also talk about the ecosystem in which they are operating. Today, we have the founders of Numocity, Ravi and Siddharth. Welcome to the podcast, Ravi and Siddharth. So, Ravi, I will start with you asking about Ideaspring's association with Numocity, right? And we had invested in you in your Fund 1, in your first version, Numocity 1.0, if I can use that. Now we are very, very happy to again be associated with you as in our Fund 2 as well, Numocity 2.0. But how has the journey transpired from where we were in our Fund 1 in Numocity 1.0 and where you are today in Numocity 2.0?
Thanks, Naganand, for inviting us for this founder series. It's always a pleasure to be with Ideaspring. You were one of our early backers. Let's look at it this way. 2019, we were in the early stage, EV just coming up. And I think you believed in our hypothesis, what the market would be. I think that is our initial boost, which you also brought in a lot of customers at that time, and it helped us. And that took us to where we were in the last 4 years, wherever we reached. And 2022 has been a little transformative year for us. We had a lot of changes. And then with 24, when we re-looked at the market, re-looked at the way we want to approach the market, I think Ideaspring coming back and backing us up. Now in a different focus, not as an early stage company, but a company which is already done and established itself. Now looking at us more from a growth. I think it's also nice to see Ideaspring backing up us in our growth stage, not in the early stage, also at the growth stage. I'm quite sure it will be a very good journey going forward, and we look forward to your continued support.
Lovely. So, Siddharth, I know you have a very deep understanding of the EV market, not only what Numocity does, but in terms of batteries, chargers, cars, and so on and so forth. Uh, what is your take on the current state of the EV market? Is it living up to its promise? It is going slower than expected? Will it accelerate? How do you see this market evolving in the next 5 years?
Thanks, Naganand. I think what we have seen is EV has always been an interesting journey. It's always been full of surprises. So starting from where we were about in 2019, I think there were a lot more question marks. Will this happen? Will it really lead to some kind of an adoption or a change, or would it stay as a very niche idea which wouldn't see mass scale adoption? I think the last 5 years have shown us that technology can actually work in the field. So I think we have seen that, and this is not just some early prototypes which have been there, but I think the market itself backing up that, not just in India but in multiple markets around the world, we are seeing EV slowly becoming mainstream. So we are seeing larger automotive manufacturers, larger players in the energy ecosystem acknowledging that this is a moment of transformation in the transport ecosystem. This is a technology which is going to stay for the long term. So I think EV is past that validation phase. Now I think it is on to that adoption and growth phase. But that said, I think EV, the changes which we are seeing in technology are very rapid. So looking at all the parts of the ecosystem, I think batteries are getting bigger and cheaper. So I think we have higher performance at more affordable price points. More technology getting into cars. So I think the capabilities which we see in cars in terms of their capabilities for driving, infotainment, passenger comfort and capabilities is also going up. Today, I don't think EV is anymore going to be perceived as a trade-off when compared to conventional technology. It's in fact now a platform to deliver superior customer experience. Cost parities we have been able to achieve in certain segments. I think soon it will be achieved in other segments. But more importantly, I think the customer value which is being delivered is now really going up, because I think now for new customer experience as well as giving a superior transport or a driving experience, electric is going even beyond what conventional ICE technology could offer. So at that point, I think when customers look at it as value, I think electric is far exceeding it. Because also one other point here would be, look at the luxury segment. Luxury segment, all the premium vehicles have adopted it. So there's not really for cost, but it's also about customer experience as a point. So I think electric has proved customer experience is there. For fleets and other customer users, it is being able to deliver in terms of cost savings. And then there's the larger environmental impact and offset.
Which geographies you think are catching up on the EV space?
Uh, Currently the market looks like is, I think EV has really established itself as a very viable technology in the Chinese market, but now other markets are also seeing strong adoption. So we are seeing, of course, with Tesla leading the adoption in the US markets. Europe has bunch of Tesla plus other OEMs leading the thing. India, I think, has its own story. I think our own domestic brands like Tata and Mahindra are leading the way. Now we have more competition coming into the space. So I think every market is going through that stage. And also if you look at sub-segments like two-wheelers, where India is actually the world leader, we are seeing that electric transformation is happening. We are seeing new age companies like Ather, Ola and others. And of course, the incumbents also offering their product.
I'll come back to you on the tech stack, but before that, I want to talk to you about the evolution of the business model from where it was in 2018, 2019, when we funded, where it is today, and where you think it's going to go, right? For a Numocity which is building this, glue or a software middleware to enable the EV ecosystem in terms of charging, payments, or whatever. What is the roadmap that you are seeing that has evolved from 2019 to where you are today to where you see it going in 5 years down the road?
Nice question, Naganand. So if you look at 2018-19, this early market, in most of the markets we operated in, it was, I would call it a blue ocean. Everybody were new. So the expectation in the market at that time was, how low can I keep my OPEX? How low can I keep my operating expense of running these networks? So everybody looked at a revenue model, business model, which said, you be a partner. So it's more of a buy. I will work with somebody. And most prevalent model in everybody's mind was, can I do it like a SaaS model? Can I, whenever I add an asset, can I pay you? So that my OPEX at that moment is as low as possible, because I am testing, validating my business model in terms of being a CPO or a charging network. So that's how it started. And that's where our revenue model and business model was tied to in a way that whenever they add an asset, we charge them. And that's how it started. And but over the period of time, I think we also now started seeing the whole market segmenting itself into different kinds of players. It's no longer one player, everybody small, everybody looking at the same way. Now, 4 years down the line, we see large enterprises coming up, which is oil and gas players, utility, telecom, the bigger players coming in and talking about, how can I run it in a larger scale? How can I scale it?
What does larger scale mean?
So for them, they want to be like ubiquitous petrol pumps everywhere. So everybody wants to use 100,000, 200,000 kind of numbers, where in 2018 we were talking about 50, 100. So it's a scale of 1,000 in terms of factor of 1,000 they want to scale. Now the mid segment is people who still are entrepreneurs who are trying to set up this network. They remain a mid-size network. They are still operating in the old model, because for them it is still a small network and they're trying to run it. Then there is a long tail of home and apartment who don't really create a network but who have smaller chargers, and they also want to still stick to, how do I run on an OPEX model? I don't want to spend more money. The fourth segment which has slowly come up are the vehicle OEMs, who are more of mobility service providers. They don't want to own the assets. They want to have the convenience of providing charger. There they are really clear that if they may generate revenue, I would share revenue. So that's the new model emerging. Where the others, the mid to small, say, I would like to do it like the older times, then I would pay as an OPEX and I will grow.
Okay, but for all these guys, like we have also discussed this internally, saying software is installed on a charger per charger basis versus per transaction basis. And so where you see that going, and then we have spoken about telecom type roaming, and then how do you see that evolving? Because for Numocity particularly, I think it'd be great to have transaction model. Do you see that evolving towards that?
See that slowly happening, because the larger the players, the enterprise players now have two models of looking. They don't look at it as an OPEX anymore. For them, they look at it as, either if I make a big revenue, I'm okay to share a piece of a revenue. But the no asset players are very easy to do, because they don't own an asset. If they generate revenue, they are continuously moving towards a revenue share model. But larger enterprises who have assets, for them it's a mixed bag, because they don't want to make it purely revenue, because that's their top line, and they don't want to lose big amount of their top line, because they have an OPEX, they have to cover their margins. So there they are looking at a mixed model, where it will become more like an enterprise software, like telecom and others buying a large software deal, and then with a small, let's say, a topping, which is
So you see a hybrid model evolving.
hybrid with large enterprises. The mid and small will still stick to the older models, but the EMSPs who don't own assets, they are completely on to, let's say, transaction.
Because that is their model.
That is their model, because they are earning money and they're okay to share the money. So I think we will see a mixed bag in the next years. And we want as much as possible from a large enterprise and the revenue share. But we don't stop serving the other two. But it will be a transition. It will take another year or two for people to clearly segregate and say, I'm of this model and I'm of this model. Everybody is exploring right now.
So to support that business model, Siddharth, in terms of the technology stack that we have built in Numocity, how is it conducive for the evolution that you're looking at in the next 5 years? Because you have to support so much different hardware. There's all the chargers you have to support. You have to integrate with the grid. So what are some of the key challenges that you think Numocity is uniquely positioned to solve, even from a technology perspective, and how are we preparing ourselves for that?
So I think Naganand, what we would like to also look and understand here is, I think every customer during their business journey, at every stage of growth, they need different kinds of capabilities from the software systems they're working with. So I think initially when you are testing out the market, you're looking for something which gives you bare bones essential, and then you're looking for something which may scale and then will help you extend the thing. Now when you're mid-size and seeking to grow, depending on the market conditions, you want to create differentiated experience for your end users. Now digital plays a key role both in keeping your operations running as well as making business differentiators. So the way we look at how we can serve multiple customers who are in their own journeys at different stages while helping them grow is to look at how the technology stack can address different parts of the functional use cases. So one part is essentially, as you said, the field asset management. So field asset management is largely driven and designed to be very robust, scalable, seamless growth for them. So they can, you know, make decisions as to how quickly they want to grow, as geographically diverse they want to go, add more charges without having to worry saying that will my IT systems, will my operational processes continue to scale with it. So that we let them do. But whereas on top, what we have also realized is that different markets have different ways in which they serve the consumer. So just like how we have seen in retail as well as in telecom, different markets and different geographies have different ways of enticing
The markets you are in, because because I know we're about 23 countries now. How many we are in? So what are the various market segments we are in today?
Today, we predominantly serve Asia and Middle East have been our largest markets by the number of customers we serve. So we have a very strong installed base here in India.
So how many vehicles have we supported so far, or so many vehicles have used our infrastructure?
We have served over 2 lakh customers today is whom we support on our platform. Yeah, 2 lakh customers. So we have been working, looking at the journey in India, looking at how Indian customer preferences, how the operators looking to serve customers are looking to build offerings which entice customers. Because eventually, if you look at it, this is a business in which you want to encourage a repeat usage, because end of it, just like telecom or something like that, it's more of a sticky relationship between a customer and a service provider. So to enable that stickiness, to enable enterprises to eventually increase their margins and their things, we are trying to see them how digital helps them both stand out as a differentiator as well as complement their business and marketing strategies. So that's where we are building certain parts of stack unique to each customer. So that's one part we are doing. If you look at Middle East again, I think that's again a market which is seeing its own kind of a growth cycle, because I think both the kind of customer user experience as well as the usage patterns are very different. Because again, you have certain markets where driving distance are short, certain markets where driving distance large. The kind of vehicles they use, the commute pattern very different from India. So both passenger as well as fleets. So fleets is again another interesting segment we serve. So I think with rise of services like e-commerce, quick commerce,
But those are two-wheelers, right? But
so we are seeing adoption of three-wheelers, four-wheelers and other larger vehicles, electric vehicles, becoming part of the logistics stack. So not just last mile delivery, but even mid-mile delivery in a lot of markets is switching to electric.
because our solution is typically three-wheelers or four-wheelers, right? Not as much two-wheelers as of today.
Yes, so we are predominantly focused more on the larger vehicles.
Yeah.
Two-wheelers also is something we can support, but the emphasis has been more on the larger vehicles.
Would you foresee us also supporting two-wheelers down the road, or
I think the technology per se is ready. I think it's more like to look at our customers. So again, I think Naganand, I think for us important is we are a B2B2C customer. So we are trying to align our product and roadmap based on the business aspirations of our customers. So I think when our customers seek to serve these two-wheeler segments, I think we are happy to be there with available solutions. So they can still have a single platform to serve all kinds of customer segments.
So Ravi, aspirationally, what are you looking at in terms of where Numocity should be, say, in the next 5 years?
So I think we've had a fantastic journey from where we started, from an idea to globally recognized brand now. I mean, most countries, people would know us, and they also know for our work and what we have offered. So the next stage in the evolution of what we see as an ecosystem is grid and utility-based solutions will become very key, because as EV adoption increases, EV chargers and the energy will add load onto the grid, which means a new opportunity space opens up there. So in next 5 years, we want to be seen as an end-to-end stack, starting from whether you do on the vehicle side, on the charger side, and on the grid side, have a solution which stitches all of them. So that's from a what problem we want to solve on. We want to be ensuring that EV do not disturb anything on the energy value chain, and how to make it seamless, effortless, and monetizable. All of them want to make money out of it. So that's one from a broader angle. I think from a business point of view, we have touched all geographies now except North America and Europe. China, we really don't want to focus on as a strategy. So if you look at North America and Europe, North America is a key area for us. I think in next 5 years, we want to establish as one of the major players in North America.
And how will you do that? You build your own sales team, you work with channel partners, what do you do?
Channel partnership has been our success formula in the last 5 years. We are continuing on that. We are now getting newer channel partners in North American region, in Europe, and all the other areas. And they will bring a significant amount of sales. But the idea is also to collaborate and form complementary solutions, rather than they are not trying to be just a pure software resellers of our solutions. We become embedded into their overall end-to-end solution. So we are tying up with players who have an already existing portfolio serving utilities, already existing portfolio serving US market. So when we go as an add-on, top-up, complementary. So that's the approach we are taking to access the market, because to do it on our own with our own sales team is a huge task, because that will have a lot more capex and opex to really get in there. But a channel partner would be the right way. And we are really aligned with some of the major players in North American market, global market, who should get us that access. And we are already seeing the early success of it.
So your focus hence then is to expand on the Indian and the Southeast Asian market, including the Middle East, and then get a foothold into the or expand into the North American market next 5 years.
In the markets we operate in right now, we are seen as one of the leaders.
Europe hard?
Europe is hard. It's a very fragmented market. And also it's a red ocean. There are a lot of existing players who have done things and not succeeded. So till it opens up to an external player, we really don't want to be in Europe. North America is pretty open. And the other interesting area is Asia. Though we are already there in many countries, APAC is slowly opening up. I mean, many countries like Indonesia, Philippines, the market is 2-3 years behind where we are now. So next 3 years, I think we will have huge opportunity, because those countries are very similar to India in terms of demography, in terms of the usage patterns, vehicles, very, very similar. So I think our success in India and some of the Asian countries will help us to replicate that in those markets. So right now we're already seeding with the first early customers to be there, so that when they start to grow, we also will grow along with them.
So coming back to the tech aspect, Siddharth, like we are saying we want to be OEM agnostic, we want to be charger agnostic, we want to be grid agnostic. It's a great vision goal to have. But in terms of actually implementing it and getting it to work in such disparate environments, are we well positioned, or do you see any challenges in getting this deployed the way you are envisioning?
So yeah, I think the problem is that yes, I think there are multiple standards across different geographies. So and also sometimes the lack of clarity in terms of what particular technology or approach may get adoption in a particular market is something we also have to either wait and watch or kind of go with the solution. So one way to try and tackle this is more we are taking like approaches which are more region focused. So we believe in a certain region, a certain kind of technology and a certain kind of problem solving method will work. So we go with a solution, we try and run early pilots. So the idea is also to build the solution and validate in a very agile manner. So that's where sometimes, as Ravi said, we serve a segment of customers. So sometimes the smaller and mid-sized player are willing to quickly trial out certain new solutions. So we are happy to quickly iterate, figure out what works best for our market, and then look to scale it. So I would say that we'll do certain deep research in areas where we're very sure because of standards that's the area to get. But certain other areas which need to be explored, we're happy to do quick experimentation, quick iterations, and learn. I think throughout our journey, I think that's one thing which we have differentiated ourselves. Even when I think our advantage when we look at certain markets where we are even challenging some of the incumbent players is our openness to solve the problem, be owners of the problem rather than worry about how the solution works. So I think we want to obsess more about the problem, keep iterating on the solution till it really solves the problem. So we will take a more market agnostic approach also to solve problems really well in each of the markets we enter.
And then in terms of the market, so what's our percentage of market in charging in India as we speak today?
Yeah, so the charger numbers are contested. Nobody has one stand-in number, but knowing the players we serve and the numbers we are probably around 50-55% of the market is served by us. Our platforms serve to
That's a good number.
pretty good number. I mean, that's the reason there's a clear acknowledgement in the market that we are the market leaders from a technology point of view. We are not the charge point operator, but from a technology, probably half of the country's network is going through us in our platform in one way or the other. It's the same in several other markets also in Saudi.
So what are your top three markets today? One is India.
UAE and Saudi. These are the top three. In terms of traffic, in terms of what we manage, these are the top three. Of course, there are other markets opening up now, but I think these three has been the top three for us. And also has brought in a lot of learning. India is a great learning ground. Like Siddharth said, we are now not seen as a startup by many companies. Actually, the larger companies see that we are actually a big company. That's a perception, because the way we work, they see we are a big company.
Although we'll continue to work like a startup. So
Exactly. So our iteration and our ability to solve things quickly is more like a startup. We are not trying to do it like a big company. That gives us the double-edged advantage, because they see us professionally as a large company, but our way of working is more of a startup mode. So sometimes we have to blend it and ensure that we don't do too many things, which is more like a startup, which large enterprises don't like, because they want more steady and stable systems which they need. So we are blending both. But I think these three markets have been really great for us in what we have done.
understood. So, but hence to also now 5 years you want to expand. You said you have 50-55% market share in India. In the marquee markets you want to operate in, what share of the market are you looking at and cloud planning for?
So if you look at just Asia and Middle East, these markets, because it is newer market, there are no established players. I mean, we have taken the land grab and tried to be the clear winner. But if you give the market growth, there will be 4 to 5 players who will eventually emerge, because competing companies don't want to use the same platform. I mean, that will slowly happen over a period of time. We still believe 30 to 40% in any of those markets will be a pretty good market share to have, because that's, as it grows, it's a pretty large market share. But newer markets like US, it's already slightly more established, 5 years ahead of the curve from wherever we are. There, I think even getting at 10% of the market, given also the size of the market, would be a decent target to have, that we want to be one of the top 10 players, let's say, in that market.
So Siddharth, how do you manage the pessimism that exists with respect to EV? Because I keep reading a lot of stuff and I'm a believer, but me being a believer doesn't necessarily ensure the market is a believer. And you say E is going to slow down, the incentives have come down, whatever. So how do you now balance that with the optimism Numocity needs to have to kind of keep chugging along in the direction you want to go? And then where is that balance coming in?
EV, along with the technological cycles, even I would say the interest cycles in the technology and the support which the sector has got has also, seen its highs and lows. So I think currently also the market is seeing a lot of change, because I think different governments in different countries are taking different viewpoints. So I think primarily there is one which says EV is at an early stage, so it requires incentives and policy support for adoption. There are some who says let the market decide, so no special treatment for EV as a sector. There are some who are even possibly, ignoring EV and saying if it happens, it happens, or we have doubters. So I think we have seen certain markets go through those cycles. There have been phases of growth where three.
Give me those examples of which markets.
So I think if you looked at the Indian market itself, I think India has at least had some kind of a policy consistency. We have had the FAME policy. So FAME policy, FAME 1 was, looking to kickstart the adoption of e-mobility. So when you looked at the kind of provisions it had, but given the stage of the market, it was a large fund. It was deployed. It had benefits for both private users as well as fleet users, all kind of users. FAME 2 started refining its focus a little more. It was looking at larger impact numbers. So the focus was more like we will fund for impact rather than for convenience. It was no more about trying to bring the masses along, but for looking for big impact. So the focus was more on public transport, things which could move the metric. With FAME 3, if you look at it, a lot of end user subsidies have been reduced. So if you see a lot of subsidy margins which we have for two-wheeler purchase, four-wheeler purchase has reduced, over a period of time. But also we see, but by the time the subsidy program kind of tapers down, the market is ready with more products and all the. So Indian market, I think we have seen that thing that as subsidies and government support has slowly begun to taper down, the industry has picked up, it is ready, and now there is a momentum behind it. So I think that's a good case study for most.
India, your most optimistic market?
We would say India, APAC, Middle East are all, I think, very markets we are very bullish about, because we still see that there are a lot of structural needs also for e-mobility. So one thing also common about these markets is that we are all net energy buyers when we look at conventional fuels. So we all spend a good chunk of our money is spent in purchasing oil from overseas and then fulfilling our energy needs. So hence being more energy self-sufficient by transitioning to electric mobility. These are also markets which are also facing the challenge of air pollution.
But environment today is, within the new world order, some countries are looking at it.
Correct. But I think, again, we don't have to look too far like Delhi. I think all said and done, our own capital still needs a respite from the pollution. And for that, one way is cleaning up transport. So e-mobility is not the sole solution, but it is one of the very important parts of solving a climate crisis. And climate crisis has reached a certain stage in a couple of cities and countries that it cannot be ignored beyond this point. So I think we will still see people adopting it for the sake that it is good for them. But in those markets, it's important that the fundamental underlying development of that ecosystem is already facilitated by government. But if you look at other markets like North America, US in particular is one where we have seen the current regime has taken a very different viewpoint to the previous regime. But whereas the previous regime did create a lot of policies and facilitate a lot of investments to create the ecosystem, currently we understand there's a bit of flux with regard to where the industry goes. But also maybe it's also a sign that the market is almost reaching that state where maybe the markets alone can drive it. So it's Europe also, we have seen a couple of countries where subsidies have tapered off, but not necessarily that the sale or the adoption has immediately fallen off.
So you're still optimistic?
We still believe, but maybe we believe there may be small speed bumps, but not really a stop to the adoption of it.
So Ravi, your last question for the podcast, like your vision for Numocity in the next 5 years. What are some of the strategic decisions you think you'll be taking?
Yeah, I mean, we still, as a strategy, we want to be a top 5 technology vendor in the world, not just in India. Globally, we want to be seen as a top 5 technology vendor, which also kind of asks us to be very, let's say, have a stack or a technology layer which large enterprises can use. I think that's our real vision, that we want to be serving the larger enterprises because the impact they bring on the market is very huge. And also they can make the transformations. So though we want to serve the smaller segment, I think all our focus is now on the large segment to see, can we be that player partner in making the whole transformation happen? I think that's the broader impact if we can make. As an EV company, we often get questions saying, how are you moving the needle? What are you moving? I think by enabling these people, the larger enterprises to move.
Without charging, there's no...
Exactly. So if we can enable them, I think that's an indication for our contribution to clean mobility.
Yeah,
I think that's what we...
I know you and me have discussed this, that, there will be EV charger in every petrol bunk, and in that we'll be running Numocity's software, right? So I think that's the ultimate goal. Lovely. Thanks both Ravi and Siddharth. Awesome talking to you guys, and wish you the very best in building a company to your vision. And I was talking to somebody this morning. They said when they charged in some EV charger in Chikbalapur, close to Bangalore, they saw Numocity there as well. So I think wishing you guys luck to build that vision.
Thanks, Naganand, for inviting us, and also thanks for all your support in this journey. And we look forward to continued support. Oh, absolutely. Thank you. Look forward to an electrifying journey ahead to all of you.
As a good end to the conversation. Lovely. Thank you.
Thank you.